So I'm usually talking about S&P 500 related markets here, where I'm looking at the E-mini S&P futures or the SPY ETF or the stocks in the S&P. I do, however, study other markets because guess what? The S&P 500 is fantastic and it contains large cap stocks, but oftentimes smaller cap stocks like those in the Russell 2000, which you can track and trade using the IWM ETF, well, those smaller cap stocks often turn and have a move ahead of the larger cap ones. So I wanted to check in on the IWM because it has come into a forecast, and this would be a great opportunity to show you how to navigate this forecast and look at this on a multi-time frame analysis approach. So I'm Hema Reddy. I use price, time, and momentum to boost my trading and that of my tribes. And here we have a monthly chart of ticker IWM. Again, that's the Russell 2000 ETF that is showing each candlestick representing an entire month of price action. And for a long time now, actually anyone could have had this on this chart, as of January 2022, I've had a forecast for price and time to meet at this exact point here, 166.76 for the price and the month of June 2023 for the time. So as you can see, the market was consolidating and holding support at that forecast price. Yes, on your forecast, when you deploy loss forecasting, sometimes those price components on the forecast act like a support or resistance level. And this held beautifully for months, actually for an entire year, before finally lifting off into the time of the forecast. So this is a great opportunity to look at how upside and IWM might unfold. So to do that, I'm going to now take us over to a weekly chart. Now on this weekly chart, I've marked off two levels. Okay. One of them is a resistance level that has actually been hit, 193.05, and we're sort of dancing around it. If the shares are able to get above that level, the next upside target would be this high, 199.26. Again, looking at a price high with a capital P from back in February of 2023. As for support, this level here has actually not been hit yet. So this support I'm going to keep as a solid line at 182.98. Right? So in the bigger weekly picture, those are the two levels that I would monitor for potential price ceiling, remaining here at 193.05. If that ceiling gets broken, expecting a move up to 199.26. But if there's weakness along the way, then 182.98 would be among the most important supports. It's not the only one, but it's the most important on the weekly chart as of where price is now. Also check out the RSI power zones down below, my favorite momentum indicator. They have returned to some levels that I identify in my advanced techniques. I'm actually doing a special training on that this week, so if you're in my tribe, keep an eye out on your email. And this is a little slight hint that perhaps this initial burst higher might have some competition, right? Might have some overhead to deal with. But it's not a sign that the market's turning lower just yet. It's just kind of a heads up to watch for. Okay, now let's round this out on a daily chart. All right, so here we have the daily chart of the IWM. We've now gone from monthly candlesticks to daily candlesticks. And here you can see the IWM ETF has a lot more gappiness to it, if you will, on the daily chart. Now, check this out. Here are support and resistance levels that I've identified that will be important for monitoring the near-term price action. So not just here in IWM, but across the broad market ETFs. So that would be the QQQ, the DIA, and of course the SPY. Here's what I think you need to be careful of, especially as we are approaching about a week out from the next Fed meeting, the last one of the summer. There's room for the IWM to push higher. You can see it right here. The thing is that with the way that the momentum patterns are lining up, again, like on the weekly chart, there's some advanced momentum patterns coming in here that suggest that, well, there is room for a push up, but it might not be as strong of a push as we had recently to get to the current levels. If we are able to get above 194.35, then like I showed you on the weekly chart, the next key resistance is here at 199.26. In the very short term on the daily chart, okay, so on the weekly chart, I had a support much lower, but on the daily chart, if this churning around results in a decline in price, I would keep an eye on 188.84. That is an important support based on Gann techniques. So there you have it. We have had a monthly forecast unfold suggesting we're at the beginnings of a strong move higher. It's just getting going, guys. The thing is, because the markets don't just move in a nice steady line up and to the right, we have to be prepared for the wiggles and dips and curves along the way so that we can optimize our entries and exits to squeeze the most profit out. All right, so I'm going to continue to keep track of the SPY in my weekly reports to the Trifecta Trading Club, as well as the E-mini S&P in my multiple times a week to Skinny on the Markets members. I did want to show you here that small caps, especially these ETFs, can lead price moves on the large caps, which is why it's important to keep a pulse on the entire market, large cap, small cap, and everything in between. Catch you next time.